Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap. It's Friday. It's been a long, crazy, volatile week. And hopefully, you guys were prepared enough to take advantage of the volatility. We came into this week after markets in turmoil all day long on Monday. And typically that means you're oversold enough and ready for some type of crazy bounce. That means the markets probably are off a lot. You probably entered bear market territory, and those are never the times to get fearful and start just hitting things out. That's why we have the system of reducing risk as a momentum trader when we get below the 8 and the 21 day, or getting out of risk assets when you're below the 200 day, because by the time you get into the bear market, you're 20% off the highs, and you're probably somewhere near an oversold bounce. So Tuesday you had whatever, some kind of inside day, and then Wednesday was when all the fear set in, the VIX spiked, and we broke below that 1867 and did that 1820 kiss below and reversed back up. But the question was that enough? Was there enough fear? Was there enough capitulation? Could that be the day one, which we tweeted about on Wednesday, saying take a look at the landscape, could be a day one. You're seeing red dog reversals in so many sectors. You're seeing engulfing days in lots of stocks. So time to switch gears. If you were short, maybe cover. If you were looking long, time to perhaps test some. And then on Thursday, pre-morning call, was that a constructive or a destructive day? Meaning if it was destructive, you got very long on that Wednesday and then got engulfed, and it was a bull trap like it was the prior week. Remember that Thursday to Friday? That was destructive, meaning we had lower prices to come. Constructive meaning you hold higher, you see some stocks starting to show relative strength, and you go and show some positive flows. And then lo and behold, boom, we had some follow through today, and that was your 3-day move. The 3-day move that probably happens 3 to 4 times a year in both directions that really could make your year. And I know today's the day in the close, a lot of guys, even me, thinking back, oh my goodness, I wish I just had more into that Spiders 181 and 183 zone. Or, wish that I held it from there, left, with the Russell and some of the names, and came back today and pressed the sell button. But realistically, that doesn't happen. But we could all figure out ways to, take more size down there and hold longer and take the meat out of the move more. So now everyone's talking about a bottom. But now you just had 3 days, 90 handles off the lows, and now you're talking about a bottom. And who knows what happens, next week when 2/3 of the bounce has probably already happened, and we'll be heading into resistance. So let's just get into the charts. So again, this was your Wednesday move, undercut last year's lows right there. Got a lot of people out, a lot of people short, maybe like a red dog reversal if it would have turned green, if you would have used this area as your pivot. And then on Thursday, you had us hold higher, didn't go back down there, didn't really even shake up the longs too much, okay? And and then you actually even had a little bit of a trade above Wednesday's high, closed somewhat well, and then today you had some power, okay? So we talked about, can the 8-day get reclaimed? Can the 8-day that has been, the resistance during all of 2008, 2008, I keep talking about 2008, 2016, and then perhaps build. So now at this point, you would think that, that perhaps we build a little bit above this 1890-ish, and you could probably see a move. One stop to measure would be this 1925-ish, and the next would be the 21-day where there's a wall of resistance at 1950. So we tried to tell people to, not just have short in the brain when you're trying to work off these oversold conditions, and that sometimes it lasts a few, a week or a few days, et cetera, et cetera. So guys are like trying to say, Red Dog, you make these predictions all the time and come up with something, some kind of catchy phrase like remember the iPhone to head or water gun to cabase or this and that. And like, so do you think we can go higher, and was that the bottom? I would say chances are we probably can go higher to that 1950. And I would say still there's pretty big chance that this week's low is not the low of 2016. So that means you have to trade accordingly. So there is a bit more room to rally to the 21-day in a lot of things before the market really has to prove itself. But at this point, do you chase and put longer-term money to work? I don't think so. I almost think that once we get to 1950-ish, if you were jumping out of your skin down there at 1812, you call up your guy and say, reduce some of my exposure long because I want to wait and see. If you were fine during that and you're putting monthly flows in for the next 10, 15, 20 years, stay the course. But anyway, that's all about the time frame. So let's go back to the chart. This lower pivot is what the trade was. The low, a higher low, a little bit of power. Now we see if we can go sideways and get up to the 21-day moving average. And that's probably what I'm thinking about on a lot of things. Okay, just real quickly sector-wise. The Qs, similar scenario. Okay, here is your red dog reversal, which was a clean red dog reversal Wednesday. Held higher yesterday, cleared the pivot, took back the 8-day. So I would think it could see this 21-day before you need to really worry about reducing all your longs and even trying to get short. And then maybe this would be your shorting spot if we see it, and then they could actually even probably push the envelope if they wanted to with an overthrow back to 108. Okay, so again, oscillators went from minus 100 to 0. So now we see if we get overbought and get up to 40 or 50, etc. The IBBs, I think there's a setup for next week. I'm not sure why it was held back a little bit, but it's tight. This did a red dog reversal on that Wednesday, showed some strength. Inside day Thursday, trying to perk up, trying to take back the 8-day. For those of you who could take some risk, I said maybe put a feeler on today just in case it trades through this next week and it's not viable intraday. But I do think you could see a move towards 303. So this, I still think there's a pivot down here that's viable for a move up to there. So if you like the bios, and you sold it when it broke this ascending channel here, I think there's some room. The IWM also broken, trying to play some catch up. Again, another lower pivot. Here's your red dog reversal. Little wishy-washy yesterday and trying to get the 8-day. So I think, again, what is the high percentage play that you could be long before big resistance? At this point, it does seem like you can get to 104 before hitting a wall of resistance. So, easy part of the trade or the oversold part of the trade done. Now it's got to prove it can continue. Then let's go with stocks. Okay, talked this morning in my note or yesterday that the strongest high beta name has been Google. Google already took back the 8-day so it can go higher. So Google also, look at the stock, okay? Gave you a red dog reversal, never hit the 200-day like some other names here. Upside, higher low yesterday and more follow through today, right back into kind of where it broke down from. So this is showing some power, showing you that some stocks could actually do that. So be a little careful just trying to be short. So if you caught the 3-day in Google, congratulations. You got yourself a nice trade. You had a good risk reward trade when it took back 701, you could have put your stop in, 687, 13 points, and you made 45. Good risk reward if you were trailing it. It takes a lot of wherewithal to do that. Remember the what's it called? The breakout failure here could have got you out, and this red dog reversal could have got you in. Yes, it tried it here and failed. That's why it might have been a little harder this time, but that's why you keep at it. Amazon played a little catch up today. It too had a red dog reversal on that Wednesday where it took out a pivot, came back above it, a little bit of higher low constructive, and then follow through. So where is big time resistance where guys might want to try and step up and short right around there, or maybe even a little higher. We have a lot of earnings coming out next week. Netflix has looked a little wishy-washy. Didn't participate the last since earnings. The last 2 sessions. Failed right here. Remember on Wednesday, I'm like, oh, earnings are out. If it can't hold, actually, I'm like, if it can't hold 116, get out, maybe get short, and then it opened below it, and now it's trying to hold on to the 200-day. So at this point, Netflix is looking very vulnerable, so I would take a little bit of care. Okay, it's if it breaks this 200-day moving average, some guys will probably be shorting it. And look at the strength we've had the past 2 days, and earnings are behind it. So you got to be careful. This looks almost a bit more like a short than a long. Facebook still has to report it. It had a nice tradable pivot also for some of you that were involved. Took back the 200-day, red dog reversal here, a little power, today. But again, look at the wall of resistance that's going to happen there. So if you took it home long and it opens up on Monday, you sell a little bit into it. If you took it home flat, it goes in this. I'm sure some guys are going to try and short this area for a trade because that kind of thing has been working. You buy in the whole, look at the size of the travel range. If it opens down on Mondays, it will be something that closed strong that I'm sure some people will look to buy. So still lots of strategies out there. If you went home flat today, it's okay because if we open up down on Monday, there'll be strong stocks to buy to possibly go green and push. We open up strong on Monday. We just had a huge move. We're going into resistance. You could probably try and fade things. You could have even faded today. If you remember, I tweeted when the spiders hit as high as 190.50, pulled into 190 and a quarter. I'm like, you short right here versus a high 25-cent risk. It went down a dollar and a quarter. You could have covered along the way, and then once it came off the low and it held the gap, you could have been a buyer. So there's still intraday trades systematically. Let me show you on the spiders what I mean by that. So, first of all, this was the spiders. Okay, also, here was your 3-day move. You typically want to trim into a 3-day move, not add. And then here is your 21-day, so that's 195. I talked about this descending channel here, which it broke above. Okay, now we'll see if it could hold above it for a little bit to continue. So nice trade, but if you want to look at, tactically what you could have done today in the spiders, and I tweeted about it so you could see what I was talking about. Here's the 5-minute. Okay, so here was the first move to resistance. Okay, so that was your resistance. Then it kind of put in a little bit of a flag. So right here is when I tweeted, you could be short 190.25 versus here, okay, which is a 25-cent risk after a huge move. And then it came all the way down to as low as, what was this? 189, 188. So about $1.30. That keeps the lights on. And even after that, when it was right there, I tweeted at like 189.50. I'm like, cover 50%. And then down here, 189 and a quarter. I'm like, cover another 25%. If you trailed the rest of it, you know what? You would have broken even and lost a little bit on the end of it. And then it came back up. Or here, when it came back above the opening range, you could have been a buyer versus this and also made yourself some decent money. So, 2 ways to skin a cat, playing the ends of the ranges with a calculated plan, especially after this big move. Apple, on the VTF, we made some money long it. Gene Munster came out with his big, his big statement. I think we saw it going. We played this move right to here, and then there was a buyable dip, played it again, and then some guys bought it and held it and closed really strong on the daily chart. I thought, unfortunately, I didn't buy it in the hole that Wednesday like I thought. I had orders in down here near 92. Okay, so I missed this red dog reversal there. And then it cleared the 8-day, and this already is in the 21-day. Closed strong. So maybe, pre-earnings, it wants to get back towards this 105. With Gene Munster saying it could be up 50%, I think some shorts probably covering. Doesn't mean it's out of the woods. It's still below all the other moving averages. But, red dog reversal, inside day, cleared the lower pivot. Lots of different types of trades. So again, that's what you're doing as a trader. You're trying to figure out the type of trades. The reversal trade, the inside day, the stronger day. Then the follow-through, maybe fade day. That could be Monday if we get that. Or if we open down, do we hold the 8-day trade? If thens, that's all you could do. Same way time frame wise. What kind of time frame are you on? What else? American Express, that was ugly. The market ignored it today. Look at that big down move. I know I used to be a platinum member and it did absolutely nothing for me. The mileage went to nothing. No one's really too impressed. It cost me $500 a year. The smelly lounges in the airports weren't so great. And I never used it again and got rid of it. I think maybe everyone did the same thing because it meant nothing. I think everyone has a Starwood card now because you can get miles in a Starwood and get upgrades in rooms all around the world. I'm just talking, but horrible looking chart. It was below everything in bad earnings. Boom. Banks didn't do so well. If you're looking for these lower level catch-up trades, this hasn't cleared. Okay, this hasn't cleared it. And if it wants to play catch-up, maybe the banks play a little catch-up next week and there's a trade there, if that's the case. But not so great, still friggin' very broken. And then there is oil. Oil reversed. Remember we talked about the oil number. I said 11 o'clock, the market's going to need juice. It's got to have a bad number and ignore it. It actually had a little bit of a better number and ripped. In the VTF, the DW2I was like 5. I'm like, guys, if that's what you do, this is probably a spot to short it. It went down 50, another 80 today. So anyway, now I know why people were trying to catch this top here, because last time it happened, people made a fortune after day 1, day 2, day 3. So day 1, day 2, maybe there's a day 3 into here. That could be potentially buyable. It's already at the 21 day, so we'll see what happens. First level that we mentioned for oil was 32. Would we get to 32? Because that would be the last pivot low that could be resistance, and that's where it stopped. If oil digests and sits for a day or two, there's a chance it can get to 36, which was the prior low that was support for a while that will turn into resistance. And then at 36, maybe the DWTI, you come back here, gets to this area, and you can find some kind of bounce. But look at the size of this wide range engulfing bar that gave you another move lower. Then you want to talk TLT. Sent out a tweet today, I don't know, 11 o'clock, or maybe even 10 o'clock. I was like, if you sold the TLTs into that crazy outside day, and then yesterday I listed it as a short below that prior low, and you were still short, probably a time to cover and maybe look for a little nibble. You're allowed to trade those things, just have to sit in there like a lot of people rant about. But anyway, everyone gets mad when I talk about the TLTs. Like, I'm not allowed to talk about them because, all the fundamental guys use it. But anyway, every time you've had this outside day, it's had lower prices. So this was your topping tail on Wednesday. Then I listed it in my note as short through here. And then you had your third down day. So if you covered on that and got a little long, okay, now you see what's next. But, topping tail is a topping tail no matter what it is, especially after a big move. And we've seen topping tails before that led to downside prices. So now, we'll see if that was it. And then you have the metals. The metals have been acting somewhat well. The guys wanted me to talk about real quickly. Silver, it fails each and every time, at these kind of areas. Like it looks like it sold off at the end of the day today. But it does seem like, this could break out and see a little bit higher, but it's got to hold this. And if you look at gold, what did gold do today? Gold's just hanging around. It's obviously in a crazy downtrend below the 200-day, but working its way higher. I don't know. I'm not in it, but guys wanted me to talk about it, so I would say it probably has to hold around here. Then at some point, maybe it takes this out and tests higher to the 200-day. Last time I was in it right here, and then I got stopped out, and then it went from here to there. So obviously it shows you how well I've been trading gold lately. So digesting, looks tight, who knows how much longer. And that's really it. Again, don't beat yourself up about what happened this week. If you started buying too early, it was very easy to get stopped out and miserable watching a rally happen like this week. If you started shorting yesterday and you might have got stopped out of your shorts today because you started too early and said, I'm going to sell every rally like everyone says. So lots of different ways you could have lost some money. Lots of different ways you could have made money strategically with the plan. Hopefully, the note helps you with the strategic plan because I write it every day, real time. It takes me 2 hours each morning. That's why I'm up at 4:45. And that could help you. If you see an idea that you like on there, that it's your idea too, it's supposed to give you some conviction to take more size, maybe hold longer, or just give you a feel of what's going on. I'm telling you, on Wednesday, that day, my focus on the bottom, I'm like, I think you should be, accumulating, or I'm going to try and accumulate from 183 down to 181 because 1820 was that level. If we break 1855 to 67, 1820 is the next thing to look at. Went below, came back above it. Buy signal. Then we talked about the igniting bar that day, and the igniting bar triggered a rally that wound up going 3 days. Now, it's a little bit more difficult. At some point, you might have a good short set up here at 190. Not so sure because it could easily push the envelope to 193 to 195. So you want to play the compelling areas, you want to have a plan when it happens, and then you want to watch the market confirm it. If you're in the Northeast, blizzard watch. Hopefully it's not too bad. Stay warm, make a fire, drink some wine, hang out with your friends and family, and watch some great football. I'm rooting for the Panthers and Denver. Not saying bet on either one. That's who I'm rooting for. Have a great night and a great weekend.